Chris, formerly of BP and now with Reconnoiter Limited. Thanks for joining us from across the pond. Rosanety, Barrios, Rosanety, it's terrific to see you, and it's wonderful to be able to hear your opinions here today. Warren, Director General of Jaguar or Jaguar E&P, thanks for joining us, and you'll add a different dimension to this conversation, obviously, by talking about oil and gas. And there he is, the man himself, Pablo Zarate, has come in, and he was able to navigate the technological jungle and to join us. Thanks for being here, everybody. We have a limited amount of time, so I want to go straight into the conversation, if I may. And I'd like to bring up, rather than going straight into the policy environment, I wanted to talk about the question of pricing. And I want to think about, I'd like you guys to give me your thoughts on how the oil and gas price is really impacting the investment climate in Mexico right now. Whilst we go through these first responses to the question, if our audience could check the polling at a certain point. It says that on my screen, the polls will show here shortly. We're going to have a couple of questions up there on the polling, and please feel free to go to those polls and make your votes as time goes on. Here we go. We've got the first question up just as I speak. Will Pemex be able to turn its financial situation around in the next 12 to 24 months? A simple yes or no question, and we'll be bringing you the result of that poll halfway through this panel. But back to that question on the pricing question and its impact upon the investment environment, and I'm going to ask Pablo to lead us off here with your thoughts about that.
Yeah, hey everyone, and thanks Duncan for the introduction, and thank you to Jeremy for the invitation. It's really great to have a few moments to chat with you all. I think that if there is one country that has shown that it believes that it cannot be impacted by COVID-19, it's Mexico, right? We have seen pretty much every single company, pretty much every single oil and gas company in the world react in a very quick way and adopt a number of policies to react to the changing prices and the changing conditions. So I think in a way this addresses the question that you have. We are seeing Pemex moving full speed ahead, and we are seeing on the policy front a number of very aggressive policies that are making pushes in exactly the wrong direction and exactly in the wrong tone. I would characterize the situation that we're living in Mexico at the moment as a regulatory blitzkrieg, right? We are facing a thunderous operation by the Mexican government to gain more control of the energy sector. And I think that's driven by prices. I think that's driven by the notion that they see that they have massive fuel oil inventories, that they see that they're going to refine a little bit more, and they're going to have increasing inventories. They see that the pricing situation is not particularly helpful, and they keep having this dream of being able to isolate themselves from global price structures. Of course, I think everyone in this conference knows that that's not possible. But it seems that that is the way that we want, that is the way the government wants to push the conversation towards absolute control that allows them to do all the contracts that they want, to enact whatever policy they want, and be able to push the Mexican energy sector in the direction in which being seen, not just in the power front, not just in the energy front. I think it's affecting how the world is looking at Mexico right now in general.
It's a compelling point that you raise here, Pablo, on the pragmatism of the AMLO administration. Rosanety, if I can turn the same question over to you, and if you could give us your perspective from where you sit. How is this the price environment, AMLO's supposed pragmatism, which seems to be becoming more and more distant? How is that playing out as you see it?
Sure. Thank you. First of all, good morning, everyone. It's a pleasure to be here with these great experts. What I can tell you is that, first of all, is that AMLO's energy policy has been totally consistent for the last 18 years. This is not a surprise for him. It is the only way that Mexico can produce energy services is through the state. That's a fact. And if you read any document, signed by Morena or by him, it is totally consistent. So that's one element that we have to understand at least. The other one that I want to share with you is that for Mexico, income from oil is something like 18 to 20% of total fiscal income. And well, what the Minister of Finance has said is that we have the whole income hedges this year. Nobody understands very clearly what does it, but the fact is that have that only for this year. According to US GAAP and to the report that Pemex made to CEC this year, production cost represents something like $14 per barrel. That's again according to US GAAP. But if we take into consideration first quarter report and cash flow, what we see is that total production cost without taxes was $33 per barrel. So if $33 per barrel, current price is $28. Then we see that I'm just to share with you the size of what I want to share with you is that if we attend to general cash flow that Pemex reported this quarter, what we saw is that all operating cash flow was financed by debt. So Pemex today cannot support even its, let's say, primary operation. They had to finance the whole operation with debt. And they had to pay $10 billion of debt this year. And they just lost, as everybody knows, investment grade last month. Because even with the highest level of tax, according to the international benchmark, the gasoline price was extremely low. So what's next in terms of downstream for Pemex is more or less the same thing. We need to recover demand according to the retail associations. During April, gasoline demand fell something between 45 and 60%. So this is a very serious number, and it is not very clear how is that Mexico is going to recover that demand. Of course, we're starting our to open economy, but it's extremely complex to understand how is it possible for Mexico take in consideration that there is no a particular economic recovery program established by the government. So this is what I want to share with you during this first round. Later, I'll let you know something about refining process.
Thank you, Rosanety. Yes, I'm glad that you brought that up because I do want to press you on refining, and I know that a lot of folks in the audience are going to have questions later on, especially about Dos Bocas, because we've got it here in our title, of course. But for now, let me turn over to Warren. And Warren, from the private sector's perspective, I wonder if you could talk to us about how has impacted the environment in Mexico, what you're seeing both short and long term with the mechanism play.
Yeah, I think, obviously the drop in oil prices creating a lot of stress on the sector in general, and you're seeing shock waves through the industry, the sector, the sports sector, bringing it close to home. Reduction in activity, particularly on land, is creating a huge amount of social pressure as well, because irrespective of when you believe the price recovery will occur in oil, because eventually the supply-demand will balance. It will be forced to balance, and you will see prices recover to at least international averages on where you can produce oil profitably, because ultimately, if you don't see at least $30 to $35 a barrel, there isn't going to be enough production long-term to be able to supply demand. The challenge that Mexico faced, which is somewhat unique, is, as Rosanety mentioned, the hedge expires at the end of this year at some point. It's going to need to be refinanced. It's inevitable that Pemex's debt is going to be refinanced next year in a large degree. And in my opinion, and I think in many people's opinions, there is insufficient capital available in Mexico to refinance that debt. Some of that capital needs to come from outside of Mexico. And I think the government is playing a dangerous game in implementing policies which are non-investor friendly, at least from an external investor's perspective, in the energy space, without recognizing the very strong need to refinance that debt. What the private sector can do to offset that on the oil side of things is limited in that time frame. We do expect to see incremental production from some of the discoveries that have been achieved, some of the international players offshore. We think maybe on land that production is going to be more stressed because the operators are smaller and a little bit more concerned about short-term cash flow issues. But where we do see significant upside for the economy and for the industry is in natural gas. Pemex has basically ignored natural gas for the last 10 years. They made a strategic decision to put that not even into this second channel, but probably third or fourth in their priorities. And as a result, we haven't seen a lot of attention in natural gas. Mexico was blessed with a very abundant natural gas resource. We're importing 60 to 70% of the gas from the U.S., depending on whose number you believe. And the reality is that is very efficient for the economy of Mexico. It's not a question of national pride. It's a question of, the gas needs to be purchased, and people that are using the gas, whether it's for generating energy, for petrochemicals, or the like, they're agnostic to where the gas comes from. But when it's purchased from the U.S., the vast majority of income leaves the country. The natural gas sector is a little bit better positioned right now. We haven't seen the drastic reductions in cost. I think the oil crisis in the U.S. is likely to be beneficial to gas prices. With us, and effects of those related that are tied into the U.S. So the northern half of Mexico, at least, as associated gas falls off in the Permian, and other basin basins in the U.S. where less non-conventional activity is occurring. So we see that there being real potential in the natural gas industry to flourish. That's obviously beneficial long-term for environmental reasons as well as a transition energy. But at the end of the day, one of the reasons we see it as being one of the few bright spots in the next 12 to 18 months is because we think it's still potentially possible to attract capital. We think the Pemex overhang is going to make it extremely difficult for anybody interested in investing in oil in Mexico to do anything until the Pemex finance issue is resolved. Even if somebody is motivated to invest in the oil sector, that is still an issue that likely just acts as an overhang and back from investing in the industry to it's resolved. The now gas sector for is less than the oil sector from that. We see a huge chaos in the industry in general. We think the people that have been conservatively financed are going to be better positioned going forward. And we do think that the government has a role to play in terms of making things more efficient to allow the operators that are being responsible and are moving forward under reduced terms, obviously with better controls because of the health crisis, are able to continue to operate and get support from the government. But the mixed messages from the government aren't helping. And I would say today, foreign investors are extremely cautious about putting any money into the sector in Mexico.
Progress in reducing fuel theft. I'm not sure of the latest situation on that, and the positive outcome of the hedge was mentioned, but I'm very cautious because the hedge is clearly positive at the moment, but we have to see what happens in the rest of the year. Let me now talk about some negatives, and we've already heard about Pemex's weak financial results. We all know debt is more than $100 billion, and there's pension liabilities of, let's say, 50 to 80 billion as well. Pemex's rating has now fallen to junk status, or what is often called a fallen angel in investor speak. There's also been a squabble, I call it a squabble, about Zama and unitization and operatorship of Zama. And that has really disappointed international perspectives of Mexico. There have also been dry holes. Let's not forget Block 9, Block 7 have had dry holes. Total and Exxon drilled a well in Perdido and exited. And then, of course, there is the OPEC plus squabble about production cuts. And yes, Mexico achieved its preferred position of not making large cuts, but this will not be forgotten. And embarrassing Saudi Arabia on the international stage has consequences. Relying on President Trump to get you out of this problem also has consequences which will probably appear in months to come. There's also been limited progress with the 20 or so new Pemex developments. There was a cybersecurity hack, a major hack, you may remember, of Pemex last November, which froze Pemex's IT systems. We've had pirate attacks on Italian supply vessels, and of course COVID reached the offshore and it's caused a reduction of activity. And I'm very sad to, of course, to note that some Pemex staff passed away from COVID and many retirees too. Something else that continues is the corruption saga. I'm sure when COVID subsides, we'll get the saga back again, the Emilio Lozoya, currently in Spain, saga, the Miguel Angel Lozada, head of PEP, saga also. I believe that it was also very negative that Round Zero was extended because Pemex was not fulfilling commitments. And whereas it would be preferable to have that acreage being worked and invested in, although Pemex probably see this as a positive, I see it as a negative. Finally, 2 points on this. Flaring, gas flaring doubled in the last few months at Pemex and is now back up to 500 million cubic feet per day, which I think is extremely negative. And the global oil crisis has highlighted Mexico's limited storage options. The country risk has clearly increased as a government policy expressly favors national energy companies, an economy in deep recession, and a continuing decline in security. And perhaps some people read this morning an increase in corruption. Business confidence is very low. For the last minute, though, Duncan, allow me to talk in more detail about Pemex. Pemex's 1Q loss of $23.6 billion was one of the single largest quarterly losses by any oil company. I searched my records and I could only find one other greater loss, which was in 4Q 98 by a company that had done a massive write-down. Added to the 2019 loss of 18.3 billion, that's 41.9 over 15 months. And I reiterate my long-held view that losses like this, not only are they very disturbing, they point to the need for structural change. Now, it's important to understand that large parts of Pemex's losses are due to what is called mark-to-market accounting. This is not physical losses of cash. It's a loss of value, not cash going out of the door. Mark-to-market accounting refers to accounting for the fair value of an asset or liability in current market pricing. So, for example, oil stocks on the 30th of March are worth far less than they were, say, on the 31st of December. Part of what you're seeing is a combined effect of mark-to-market accounting. In fact, the taxes and royalties paid to the government was actually quite healthy the last quarter. And I suspect that's why the energy minister smiles and says oil is a good business to be in. But finally, let's think about 2Q results with much lower demand and pricing, and adding some of Rosanety's comments, I think 2Q should look very ugly. However, so will everyone else's results look pretty ugly. Yes, the upstream is losing money, the downstream is losing money, it's not creating value, but it's all likely to get brushed away, brushed off, wafted away as due to COVID. In fact, it's a great opportunity to put out poor results and put all the blame on COVID and OPEC+. This is a great opportunity for Mexico to abandon its 2.4 or whether it was 2.6 million barrels per day production target for this sexenio. Thank you, Duncan.
Thanks, Chris. That's fantastic. And you set me up perfectly for the revealing the results of the first poll. So if you haven't voted already in the poll, please go over to the polling tab, make your choice, and I'll string this out for just another couple of seconds so that people can sort of click on the yes or no button on the question here, which let me just repeat to you: will Pemex be able to turn its financial situation around in the next 12 to 24 months? And then if you sort of stay on that, there you go. We can see the results right now. Thank you, Jeremy, and the team for putting this up, whoever's responsible for that. And you can see that, yeah, it's not the most optimistic scenario here. Although it is green, which suggests that perhaps there's a sense of let's go, or this is going to be more environmentally friendly. I don't know. But the choice of colors there's maybe a little bit off. But yeah, there's I think amongst our audience we see that most people are thinking this is not going to end well. Let me come back to the panel, and we've had a number of questions coming in on the right-hand side in the discussion here, and so I want to bring those up. But first of all, I'd like to go back to Warren. We've had a couple of questions in the discussion panel here about natural gas and the outlook here. I said earlier on I wanted to talk to you about how natural gas can really be a reactivator for the Mexican economy. and what needs to be done to do that. There's questions in here on, obviously the obstacles to developing natural gas in Mexico. And there's one question in there as well about, should Mexico choose between gasoline, in other words, refining, or should it go with investing more in gas? So let me take those sort of two questions which are there, Warren, turn them over to you and hear your thoughts on how we use natural gas to move Mexico forward economically.
Well, I think it all starts in the subsurface, Duncan. We have enormous gas potential in Mexico. It's the same. The Burgos Basin is the extension of something that's been producing, in Texas successfully for 50 to 60 years. The vast majority of what we're talking about is conventional gas resource. There is non-conventional potential in Mexico, but the reality is it hasn't been an area of focus for anybody. And really what we're talking about is conventional gas resources. So some of the concerns associated with non-conventional development hopefully will not be an issue here. And what you have is, the Gulf of Mexico and all of its surrounding areas is one of the richest hydrocarbon provinces in the world. The source rock is completely rich. And when you look at the drilling density and the development density and some of the dynamics about how Pemex historically had worked in the Burgos Basin, there's a huge amount of potential. All the way from Burgos all the way down to the Southwest Basin, you have gas potential in Mexico. It hasn't been an area focused. It's been under-drilled. But I think most importantly, what you're talking about is, not just adding another 1,000 barrels a day of production and some profitability into the industry. What you're talking about is converting imports into local production, which has much more of a knock-on impact for the economy. What we're also seeing is that most of the gas focus right now is in the hands of private companies, at least those that are focused on it. And you have infrastructure that's already there, a very large, well-installed infrastructure, at least from Mexico City north, that used to send gas to the U.S. I think people forget that these huge pipelines, regional pipelines, were actually originally built to take Mexican gas to the U.S. And were turned around a number of years ago to bring U.S. gas south. But what it means is the capacity is there. So as a developer, as an E&P company, the speed in which you can bring gas resources on in Mexico is relatively good. Obviously, we have the same challenges as everybody else. There's time to get permits and things like that. But at the end of the day, you're not talking about building hundreds of kilometers of pipeline to be able to tie in your gas resources. Chris pointed out it's really an atrocity in a country that is importing so much natural gas that we're flaring as much as we are. It's really a tragedy that the infrastructure hasn't been put in to be able to use that gas, whether it's for generating power locally or whether it's for tying it into the grid or petrochemicals or whatever. It's really a tragedy, and that's something that needs to be changed. But I think where we see the upside with natural gas is, you have the ability to really impact the economy in a much more incremental fashion, and in a faster pace. And ultimately, you're using an energy which has a lower environmental impact. I think what we've done a disservice as an industry is really communicating to everybody involved, the value that you can bring by providing cheap energy, what that can mean for the economy, what that can mean for everybody, not just the people that own the rights to develop the resources and the service companies involved, but the communities as a whole. And we need to do a better job of that. Natural gas is the transition energy for the world. It's going to be the bridge from a predominantly carbon and oil fueled economy to something that looks better. What that looks like and how we get there, I don't think anybody knows yet. But I think there's a consensus opinion that natural gas is a better transition. And certainly, of all the bad things the government has done or challenging things for private sector investment, the focus on the environment ultimately is good for Mexico. And we as an industry need to do our part to make sure that what we're doing is benefiting the economy not only tomorrow but long term and being more efficient. Where we see potential is, do we think that there's going to be further access to blocks made available? Who knows? The government clearly is not favorable to that. We think it's logical. And this is not something that we believe that should be politically motivated. It's nothing to do with whether the assets should be in Mexican hands or in foreign companies' hands. Pemex is of a size and scale and has a level of challenges that they just can't focus on smaller developments. If they try to do it, they will never be profitable. And at the end of the day, what you can do with Pemex to successfully develop any field is limited until you fix the structural problems in the company. And we've been talking about this for more than 2 decades, that Pemex is effectively broken, that it is not an efficient operator, that's carrying baggage that is very difficult to fix. And by no means should we underestimate the challenges, but what I'm hopeful for is that, big crises normally foster major innovation. And hopefully this crisis is going to obligate the government to actually do something to structurally fix Pemex, because with the quality of resource that Pemex is sitting on, there is no reason that their lifting costs should be as high as they are. And that is a systematic problem, leaving aside the structural debt issue, which is unpardonable but needs to be fixed. That is a financial solution that, if you find the right people, can be solved. But the structural problems operationally in Pemex need to be resolved as well, for Pemex to be part of the solution for Mexico going forward. Because right now, if we're honest with ourselves, Pemex has reduced their social investment. They're not generating profitability. All they're effectively doing is passing on royalties to the government. And it would be better served for Mexico and Mexicans that the people that were turning the underground resource into production at surface were also generating profitability and having a knock-on effect for the whole supply chain, than having it in hands of people that are just trying to survive.
Thank you, Warren. I just want to say that you made the point, which has been made many times, of course, that natural gas is the bridge to the energy transition, the bridge to the future. I feel as though Andrés Manuel sometimes believes that it's combustóleo, it's fuel, it's the bridge to the past. And certainly so much of the policy, you're not allowed to smile at that, Warren, but so much of the what we see in terms of energy policy is backward looking. We've got the second polling question live. So if you go and check that out, in which areas of the value chain would you be willing to invest? Upstream, midstream, downstream, fuel retail, none of the above. I know that looking at my pension fund recently, I'm probably not going to invest in anything anyway. So, that may be a mute question for me. But in this general discussion section of our Q&A section of our panel, please feel free, the other panelists, jump in if you feel strongly about speaking on one of these issues. But we've had a number of questions, obviously, about Pemex here. And you can see them there on the right of your screen. They're coming in very, very quickly here. Questions about Pemex's 20 priority fields plus 2 new ones. That's coming in from Pietro. If somebody wants to take that, and obviously I'm looking at you, Chris, on this one. But also we've had questions early on in this panel about whether or not Pemex's financial issues and its all of the challenges that it faces in the low oil price environment, whether or not that's going to bring about a change in government policy. Are we going to see Andrés Manuel being more likely to move towards opening? You touched on that, Pablo, so maybe you'd like to come back on that at this point in time. But Chris, why don't you take sort of that question about Pemex's priority fields and the relative lack of success that we've seen there on that question.
Yes, Duncan, I think, there's a fundamental issue of is it better to develop lots of small fields or develop one big one? And we've talked about this a lot before, and the economies of scale come by developing the single large field. And the subsurface people amongst us would say, well, the big fields are probably in deep water. So Pemex is faced with the challenge of trying to develop many small, okay, some of them are medium-sized fields, and it's probably not an efficient thing for them to be able to do the way they're set up. Last year, you remember we discussed the upstream and how severely underinvested it was, and that it probably needed 30 to 40 billion a year to reach 2.4, 2.6 million barrels of oil per day. And is probably underinvested by about 50%. In other words, the sector needs double what it's getting. Today, whatever the oil price today, it remains underinvested. Are those small fields a good thing to do? Yes, they're a good thing to do, but if you have a large target, the best way to make a big step towards that large target is develop large fields. I'll leave it there, Duncan.
Thanks, Chris. Pablo, would you like to jump in here?
Yep. So I think the thing here is we tend to think that pragmatism can be just switched on with a button. and that it's something that is just common sense, right? And when you think about it very broadly, it is common sense, but it cannot be turned on with a button. So I think that we haven't really spent much time reflecting on how many capabilities have been destroyed within the Mexican government, how many very talented resources, how many incredibly savvy officials have left the Mexican government. And when you start thinking about it in that way, pragmatism is not really an option right now. It's not really an option that you can execute upon immediately. And that's a very depressing thought. But I think it also um, points in the direction of why they are trying to look for, in their view, the easy solution, right? If we are having this product right here, fuel oil, that we cannot get rid of, why don't we just force it upon CFE? If we are not being able to make ends meet here and there, why don't we just use those long-term funds to address the short-term financing gaps that we have? If we are facing a lot of political pressure because of lower oil prices, why don't we just say that it's all hedged, even though there's absolutely no evidence that the hedge will cover everything? We already know that Pemex's hedge is quite small, and we know that Hacienda's hedge in the past has only covered net oil exports. So they keep looking for the rhetorical solution, the easy solution, but I don't think that at this point in time it's just a matter of preference. It's a matter of that's the only tool that they have available. Because really, to be able to execute a pragmatic policy program, and Rosanety can speak volumes about this, it takes a lot of work. It takes a lot of capability development. It takes a lot of, it just takes time and resources that the government doesn't seem to have. And the very few, I'm sorry for jumping into the power sector for just a second, but the very few resources that we have that have the technical skills and the technical capabilities are being instructed by the Ministry of Energy. We saw that with the SENACE agreement. Things are being forced upon the more pragmatic officials. So it's really a depressing situation, but I think it's not just a matter of preference anymore. It's a matter of the things that they have at their disposal, and this is a consequence of the choices that they have made and how they've treated the top talent that they had at their disposal when they came into office.
Thank you, Pablo, and thank you for moderating your pessimism. That's always an important thing to do. You've mentioned Rosanety, and I want to turn to you next, Rosanety. But I'd like to throw in something else on top of that. There's a question here from Evelyn Vilches. So let me read it out to you. After seeing changes to the rules for downstream fuels and midstream infrastructure, as well as the latest proposal to change the renewables laws by the government in 2019 and 2020, do we see a same type of change in rules for upstream? What does the panel in general think about respecting the contracts awarded to date and allowing development on cases where there have been discoveries proven to be commercially viable? Thanks. Thank you, Evelyn, for that question. So, why don't you take the first shot at that, Rosanety, and then see if anybody else wants to jump in on it.
Well, what I can tell you is that timing is the key driver for this government. So I don't see that they reflect a pressure in timing with these oil contracts. What I'm trying to tell you is that they still have this argument that they are not producing. So they don't have to react immediately in order to do a major change. It is quite different with CFE and fuel oil and renewables. And later I'll try to give you some numbers in order to match this issue. But again, I don't expect a major change in oil contracts given timing. This government is doing everything in order to gain time and and gain 2021 elections. What's going to happen after that? Nobody knows. That's a game changer, and I cannot tell you if they won't try anything after that. But at this moment, I don't see a major change in crude oil contracts again, just for the matter of time.
Okay, can I just ask a quick follow-up, Rosanety, in terms of how you see those changes in the midstream side of things? How damaging have they been?
It is quite damaged. Mexico needs a lot of infrastructure, particularly in midstream. We don't have storage capabilities, and unfortunately, when we develop all these new policies, private investment announced the development of almost 70 storage projects. That's a lot of capacity. And today, nobody knows what's going to happen. We have only 5 private storage facilities operating. The most important thing is that if they start to cancel import permits, then nobody will going to have the certainty that they can import volume. And this is a main risk for the country, because affects the whole level of investments all around the economy. So this is really, really serious. But I would like to share with you something about fuel oil. I think it's very important for the audience to try to understand the numbers of fuel oil. Please remember that our refining capacity is 1.6 million barrels a day, and that today the three refineries are operating more or less at 30% of rate utilization. This government has tried several times to increase this utilization, but every time they try to do it, unfortunately, the assets are so old and they need a lot of maintenance, so it's quite difficult for them. So assuming that they will maintain this 30% of utilization, the yield, fuel oil yield of each barrel represents something between 20 and 30%. This is extremely high. The refinery in Houston produced only 2%. So what Pemex has been producing this year in terms of volumes of fuel oil is 120,000 barrels a day. And CFE, before the pandemic, used to consume the half, something like 60,000 barrels a day. With all these crises, today it is quite difficult to export the fuel oil, and with the electric demand falling, now we don't know what to do with this difference of fuel oil volumes. The average volume, again, before the pandemic was 60,000 barrels a day for CFE. By the end of March, this volume goes to 80,000 barrels a day. So that's why I really believe that even maintaining the utilization rate of our refineries, we don't have nothing to do with this jet fuel oil production, and that's why maybe there's a clear interest of the government to push CFE to consume more fuel oil. The other element I want to share with you is that the only way that I see that it is possible is doing what they already did. I mean, just avoiding the generation of private plants, not only renewables, but anyone, and increasing the generation of current plants. But this is really important. My first talk was that there are a lot of very, very old generation plants that belong to CFE that were, they're just waiting to wake up. But what I'm totally sure today is that this is almost impossible. These plants are extremely old. They cannot generate absolutely nothing. So the only possibility that they have is to increase the operation of the current ones. Anyway, this is extremely complex for the country. And the other element is that the president said that given it is quite complicated for our crude oil to be exported, we could increase the refining process in our refineries. And again, this represents that we should go from 600,000 barrels a day to 1 million. That's so important. The assets are not the capability; they don't have the capability to do it. So there are a lot of challenges. What are we going to do with our crude oil? And then what are we going to do with our fuel oil if we process it? So it's really complex. Los Bocas, let me tell you this. The first thing that you need in order to build a refinery is supply security. You need a contract. You need to be sure that you're going to have the crude oil in order to process it. Well, this refinery was planning without this little piece, in concrete. The way that they see it, it's a very simple math. We have 1.6 million barrels refining capacity in stand. If we add 340,000 else, then we had to produce 2 million barrels a day of crude oil, and that's it. That's all that we need to do. And as everybody already explained, it is extremely complex to get to that goal. What we know about Dos Bocas is just one photograph with an empty land there. They already destroyed the manglar, and that's all that we have. There's another important element here. According to financial report to SEC, Dos Bocas is not considered a capex. It is not an investment, a capital investment. It is financial investment. And why? Well, definitely because the Minister of Finance hasn't approved the project because it doesn't match with all the requirements in order to be a capital investment. Well, those are the main numbers that I wanted to share with you.
Thank you, Rosanety. I don't think you could have been any clearer than that. I think you've made a very convincing case. We've got so many questions coming in on the right here, and I want to remind everybody to make sure they vote in the poll as well. But let's put a couple of these questions to Warren. One from Xochitl Herrera. Do you think private operators will be willing to invest in Burgos and other natural gas-rich areas with the current security situation in those states? Do you think the government, Ejército Marina intervention would be helpful or not in the medium or long term? And then another one about natural gas prices at Henry Hub and Waha. They're very low. This bears strongly on the price of US gas exports to Mexico. Can Mexico produce gas at a cost comparable to US prices? Over to you, Warren.
Yeah, so I think on the first question, investment is part of the solution. Right now, you're talking about a region of the country that has seen very little investment. Outside of the cluster, the industrial cluster around Monterrey, the whole north of Mexico could see more investment. And the absence of investment, particularly in Tamaulipas, has led to there being no option for many people. And obviously, the government has not had the justification or the drive or the need to go out of the main communities to do anything. We're seeing wonderful support from the government of Tamaulipas, extremely clear understanding from the governor on down that the oil and gas sector is a priority for the state. We're seeing good coordination, communication, and at the end of the day, I mean, the security problem in Mexico is an extremely complicated and convoluted one. But I had the pleasure of living in Colombia when we went through a fundamental change in Colombia not that long ago, where a problem that everybody viewed as being unfixable isn't 100% fixed, but at least there was a huge leap forward by the peace process being signed. I believe something is possible like that in Mexico. And if you look at how these fundamental changes have occurred in other countries, at the end of the day, it has been extensive private sector investment that has fundamentally changed the economies in the region and have incentivized people to support further private sector investment rather than accepting the fact that the situation is the status quo that it is. At the end of the day, the drug problem is not something that is easy to solve, but what you can give is people incentives to want to support private investment. And we're seeing that from the local communities to the state, that is happening. It's not easy. It's certainly particularly challenging for people that are not accustomed to operating in environments that have complications like this. But you have a big plus of operating in the north. You are sitting a couple 100 kilometers away from the largest oil field service center in the world. And there's a whole bunch of idle equipment and idle people available right now willing to work very cost effectively. So when you look at comparing the Burgos Basin or anywhere in Mexico compared to anywhere else in Latin America, it is a lot easier to operate from a technical perspective because of the access to the US market and US supply than it is anywhere else in Latin America. You just don't need to put equipment on a ship. Now, is it a challenging environment to work in? Yes. Can you work successfully? Definitely. The key is working with the government, working with the communities, and having people aligned that it's in everybody's best interest for you to be there and doing things. If you come in with the wrong attitude, it will blow up in your face. But I think over the last 10 years, there has been a maturity that's come into the sector and an effective truce where everybody understands that it's in the best interest of everybody to accept certain rules of engagement, which basically, you don't get involved in areas or problems or times of the day when certain people want to be operating and they leave you alone to operate during the day and operate normally. With respect to pricing, it is never in any country's incentive long-term or interest long-term to create artificial pricing incentives. It is a recipe to create inefficiency. And even though it's difficult to cost effectively produce gas in Mexico at the current Henry Hub pricing, especially when, the northern half of the country where we're tied into the grid, it is in everybody's best interest to look at ways that it can be profitable. Because if you just put tariffs in or put some type of artificial incentive in, unless there's a very clear time frame when that goes away, it just creates inefficiency. And you can look at markets all around. We've got cases in Latin America where different countries have tried to put in place artificial oil prices and gas prices. It can work as a bridge, but it's never a good solution long term. Where we have a challenge is that the total fiscal load in Mexico is substantially higher than the US in many places, not in all. And as a result, it's not just a question of can you be as efficient at operating in Mexico as in the US? Definitely. There are extremely creative people in Mexico. There are extremely creative service companies and local suppliers that are more than happy to find ways to be way more efficient than Pemex was ever able to be developing gas or developing oil. The challenge is how do you offset that against the higher fiscal demand that we have in Mexico? And in the long run, there's a balance for the government to find a way where the fiscal load incentivizes investment so that the total amount of tax that's being generated for the country is as high as possible. Right now, the natural gas sector does have the benefit of differentiated royalties, at least in the block bid rounds that happened in the second round, where it's very clear that there's an incentive to develop natural gas over oil in terms of the royalty load. However, I think that it's something that we need to work together with the government to find ways to be more efficient. I just wanted to add one comment. I think what's really interesting over the last 6 months to a year is the official word of the federal government from the president has been very much against private sector investment, whether that's from Mexican or international sources. At the administrative level, it's a different story. The CNH and the ASEA every day is working more proactively to help inside of the rules that are extremely convoluted and bureaucratic, help the process become more efficient. And I think that's something we should be applauding and supporting because ultimately there's a huge amount of administrative load on companies to be able to comply with all the rules that exist in the Mexican government. And if we can reduce that load, even at an administrative level, it's a benefit for everybody.
Thank you, Warren. I've been receiving messages from Jeremy Martin, and he's just made the biggest mistake of his life by telling me that I don't need to abide by the time limits on this panel, so we can go as long as we like. So I hope nobody has anything else to do today. I wanted to reveal, if I can, the results of the second poll that we put up, and we actually have a third poll that we're going to get going as well after this. So Jeremy and staff, if we can see the results of the second poll, in which areas of the value chain would you be willing to invest? Upstream, midstream, downstream, fuel retail, or none of the above? Are those results available? There we go. It is a pretty even split here. Interestingly enough, yes, the green is once again the biggest segment. None of the above. That's not too encouraging, but I think there is hope here, which is that you can see that 30% of people still would invest in the upstream, 17% in the downstream fuel retail, and 21% in the midstream. There's clearly a need for investment in Mexico, and one of the questions that I always put to investors in pretty much every economic field when we talk about Mexico is, would you invest in Mexico? And they come back and say, of course we'd invest in Mexico. Mexico is a great long-term bet, and pretty much that applies to everything. And then you ask them, would you invest now? And people say, well, maybe now isn't the moment. Okay, so I think we got to talk about timing. We've got to talk about conditions here. The next poll will be coming up in a second. It is directly related to Dos Bocas. So check in with that. But I want to turn to a question from John Padilla, our old friend, who of course has already been on a panel here at the La Jolla conference this year. And John writes, how much can the government afford to continue funding Pemex financially, socially, politically? It injected $10 billion in 2019, similar levels projected for 2020. Its DUC reduction from 65% last year to 39% means a lot less money, complicated by lower prices. Government production target will not be hit either, and the list goes on. I'd like to turn that over to Chris, but I'd also like to hear, obviously, from Pablo, and really any of the panelists who wants to respond to this. And there have been a couple of questions about fracking, Chris and Pablo, and that is, we all know that Pemex has been doing its own version of fracking, right? It's called hydraulic stimulation, which always raises a laugh when you mention that. But perhaps you could give your thoughts about that at the same time. Chris.
Well, let me start, and I think my fellow panelists may wish to add. Let me start by describing what would it take to be successful. And the first thing I believe that's needed is reliable, low-cost production, and that's where the focus should be. The second thing is to have a low operating cost base. For many, many oil companies, this means taking a red pen or a knife and slicing big chunks of their operating cost base out. And I believe Pemex would benefit from doing this, or its financial results would. The third thing that to be successful is access to markets. Then it requires to be innovative, adaptable to changes and the volatility that we're seeing. Of course, it needs robust hedging strategies. And I want to add that Pemex is not the only company that does hedging. Many other small, medium-sized companies also very successfully hedge. It needs fiscal maneuvers to reduce debt, and I think it was Warren who mentioned renegotiating the debt. Well, interest levels are at an all-time low, so now is the moment. And to strengthen the balance sheet, I thought it was very interesting that all of the majors, the super majors, the first thing they did in this crisis, this oil crisis, was go out and borrow lots of money, and to borrow it at a very attractive rates. In other words, they're filling up their coffers because they know there's a problem out there, and they also see a lot of opportunities, and that translates itself into mergers and acquisitions opportunities. I believe the government has been, it's almost like they've been gifted a unique opportunity by the fact that there is a gigantic global recession. And many of the numbers that refer to this recession are yet to appear. In the UK, some of them started to appear today. And this recession is gigantic. It's got a gift of the fact there's actually chaos in the oil markets because of what was initiated by Russia and Saudi. It's gifted the fact that there'll be an enormous focus on the US election in coming months. And it is a perfect moment to reset policy, whether it's upstream, midstream, downstream. It's a perfect moment, given all this other stuff that is happening, to say, okay, the playing field has actually changed, so we must now change some of the things that we set out to do in the energy sector. Thanks.
Great, thank you. Did you want to make any comments, Chris, on fracking before I turn over to Pablo?
My only comments would be that the resource in Mexico, the resource base is clearly there. It's gigantic. The way to get to it is through fracking. The way to do fracking safely and properly needs to be worked out for Mexico, all the correct regulations and procedures to make sure it's safe and not environmentally damaging. And I think if those things were put in place, I see no reason why it shouldn't be tested in pilot projects in Mexico. Thank you,
Chris. Pablo.
Yeah, to answer John's question quite directly, I don't think the government can afford to continue down the path in which it's moving, but I don't think that's a real limit to them moving in the direction in which they're moving. I guess what I want to say by that, or what I mean by that, is that this is an administration that is driven by political symbols, and it's driven by political motives. And as Mexicans, it's quite alarming to see Pemex becoming a fallen angel. It was something that could have been, I don't want to say easily avoided, but it could have been avoided. The tools were there, and the government still decided to move ahead with that. I have a hard time with the predictions that come from the economic side of things. A number of folks in Mexico have said, oh, the moment that Pemex loses its investment grade, that's it. The government, in that moment, will turn on the pragmatism switch, and we will see a complete reshuffling of how they are approaching the energy sector. We haven't seen that, Duncan. What we have seen is the government doubling down on the perceptions that they already have, the prejudices that they already had, and they keep moving and moving and moving in that direction. I think that there are two possibilities here. Either someone finds a way to persuade López Obrador, which is famously unpersuadable, and all of a sudden he changed the perspectives that he has had for the last 18 years, or we see the Mexican courts and international courts stopping. They won't create new possibilities, they won't create new opportunities, but they can certainly stop a lot of the destruction that is going on. What's going on right now with this regulatory blitz, I would compare it to the Ley Bonilla. The Ley Bonilla, some of the audience might remember, is this case where one of the governors tried to get reelected automatically by passing a bill. And everyone in Mexico was quite pessimistic about that, because there were signals that the López Obrador administration favored that point of view, right? There were statements from the Ministry of the Interior favoring that position. At the end of the day, that was unanimously overturned by the Supreme Court. And I think that put the conversation about rule of law in Mexico back in the center. So my hope here, while I'm incredibly pessimistic, as you already noted, my hope here is that these changes of rules that we're seeing over and over again, and all these threats eventually come down to a big showdown in Mexican courts, and that Mexican courts unanimously decide to uphold rule of law and do exactly what they did with the Bonilla law, or with the Ley Bonilla. So I think that is ultimately what would stop additional pushes. Will that stop additional investment in Pemex? Of course not. Will that stop those broadcasts? I don't think it will. But at the very least, it should stop the Mexican government from keeping going at the offensive and really harming, whether it's the contracts or whether it's the broader regulatory framework that we already have. They are trying to shake off all private investment from anything that touches either Pemex or CFE investments in infrastructure. And I think this could be the ultimate stop to it.
Thank you, Pablo. We have got a number of questions left, but I need to wrap up this this panel before 12:30 Eastern time, 9:30 San Diego time. And so I've got a question here that a couple of questions I'm going to combine, and I'd like to turn over to Rosanety. There's a question here which is more general, but I think we can apply it to the case of refining and to Dos Bocas. What kind of narrative would AMLO need to cover a change from ideology to pragmatism? And Steve writes here that could it be COVID, Trump, Biden, a lack of ability to fulfill his commitment to social programs, etc.? Do you see any opening there for him to change course? And directly below that, we have a question on which I think you've already answered a large part of this, about bunker fuel. Will Pemex ever make the necessary investments to refine its bunker fuel to allow it to compete in global markets that now require low sulfur bunker fuel for international shipping? He brings up a very important point, which I think that we need to discuss further in other forums, which is that there are serious public health consequences when you begin to use bunker fuel oil for generation. And particularly in the COVID era, when we're all extra sensitive to questions of respiratory health, how do we begin to factor that public health dimension into conversations about energy? So, Rosanety, why don't you sort of jump on those questions right now?
Well, I don't see, again, this is a little bit sad, but you have to think, I know you all are technical experts, but you need to think in political terms. What AMLO is looking for, is to win 2021 elections. So all he needs is to hold the situation by that moment. Once that happens, if he wins, then he can change the constitution. That's a fact. So we can change the whole conversation by that time. So again, I'm totally sure the whole financial pressures that the country is facing, but again, he already shows that he can reduce public expenses to the minimal expression, because he's just holding until 2021. After that, again, if he wins, no, definitely I don't see any major change, because he believes that the only private investment that he needs in the energy sector is with Pemex suppliers or CFE suppliers. That's it. And he really believes he is written in all the literature that he has published. So this is important. When is Pemex going to invest in order to reduce fuel oil production? Jesus Christ, I don't know. Let me tell you this. This is quite important. You know that before 2017, Mexico used to have price control on gasoline and diesel. So if you have price control, it's totally impossible to invest, because you're losing money at that moment, that neoliberal moment when we made we caused all this damage to the country. We really believe that it was important to gain money on your state investment. So that's why the refineries need all today. They need all this investment for reasons that I really, just for political reasons, they decide to build Dos Bocas. So Dos Bocas budget is $8 billion, so they say. What I can tell you is that the money that the current refineries need in terms to have the coker and the possibility to produce ultra low sulfur diesel, we haven't talked about that, but they cannot produce just one drop of USD. So they need something like $8 billion in order to have these 6 refineries, at the state of the art. So no, I don't know. If you review the whole planning, they definitely are not seeing that they had to invest in the current refinery. So I really don't know. If it was my decision, well, this could be definitely different. I really believe that there are at least one of them that we should think to close it. And we need a lot of private investment. For me, the jewel of the crown is the one in Oaxaca. And, they operate very, very good with Minatitlan because you can cross the whole Istmo de Tehuantepec. So that's a great opportunity for Pemex and private investment. But no, I don't know if one of these days, finally, we can see Pemex investing in current refineries.
Thank you, Rosanety. We have run out of time, but I have to say the time went incredibly quickly. It was a fantastic discussion. Thanks to all of our panelists. Thanks to the audience as well. I mean, we have been seeing that people have been watching this from pretty much all over the world, from Madrid, from Mexico, obviously, from Houston, from DC. It's great to have such a global audience here. I do want to make one reference to one comment before I hand it over to Jeremy to reveal the results of the final poll. And that is our friend Carlos de Regules, who will be appearing later on, has written, the fracking regulations are in place, but he's put R in capital letters, and he's put a big exclamation mark at the end. So I should really yell that at you all, but I won't. I'll let Carlos do that later on. And thanks to all of our audience for sending in questions. And this has worked exceedingly well. Well done. Jeremy, over to you.
Thank you, Duncan. Thank you, Rosanety, Chris, Pablo, Warren. This has been fantastic there for the 15-minute extension. Look, we could keep going, but there always has to be an endpoint, and the endpoint has arrived. And let's get our folks' opinion on the Dos Bocas project. More specifically, will Dos Bocas be completed by the end of the AMLO sexenio? I'll give you a couple seconds here to vote. Anyone who hasn't voted, vote, and we'll reveal the results right now. There is your famous green, playing the role of the no vote this time. Will Dos Bocas be completed by the end of the AMLO sexenio? 83 or so percent, pushing 84%, say no. And a wonderfully optimistic Pablo certainly isn't in the 16% on this one, but that is the 16% say yes. So let's see what the panel says here. Chris, will Dos Bocas be completed by the end of the AMLO sexenio?
Well, first, let me make a slightly different comment, Jeremy.
My yes or no questions are the best.
I wanted to take this opportunity to congratulate you, Jeremy, all of your team, the sponsors and the attendees. Mm-hmm. I know many energy events have been cancelled, and this, I believe, is the first major energy conference to go globally and go virtual. So congratulations to everyone for being part of it. Jeremy, it's world leading. Everybody is clapping now. The problem is you cannot hear them.
Thank you very much, Chris. And it's worth mentioning that you serve on our board of directors, so that's particularly well received. Thank you.
Well, thank you for that honor. And let me answer your yes/no question by saying that producing and processing oil that creates no value is, in my view, not a good way to treat and safeguard a country's precious natural resources.
Thank you. So Pablo, I think we know your answer, but yes or no?
I just want to second what Chris just said and add a very quick thing here, which is I'm a permanent optimist that has been temporarily converted to pessimism. So no.
You've picked up on my other question of the week, permanent versus temporary. All right, Rosanety, yes or no?
No, just to remind you that the objective was to finish those podcasts next year. So that won't happen. And with all this crisis, no, definitely I don't believe that they can finish it.
Okay. Warren, I'll give you a pass, but if you want to answer, go for it.
No, my question is, I don't think it's going to be built, because even if you believe the government's going to move forward, who's going to build it? Who's going to be willing to accept building something that everybody knows is not going to be a viable project for the medium to long term?
I think that's a no. Duncan?
So my prediction is that AMLO will fill up his Jetta with Magna at the site of Dos Bocas before the end of his administration. That Magna may not come from the Dos Bocas refinery.
Does he still have the Jetta?
I hope so.
Yeah. Wonderful. Thank you all very much. Duncan Wood, wonderful job. Thank you for taking the baton. That was so great. I was thrilled to be able to sit with just the video feed going, sipping on coffee and listening. This has been fantastic. Thank you all so much. We'll see everyone at 10:30 California time for a deeper dive into a lot of these issues. Actually, the fuel oil question, I think, will be one of the topics we'll dive deeply into in the gas and power, 10:30 a.m. San Diego time in that session. Thank you. See you shortly here online. Thank you again.
Thank you.